Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. Let me just I haven't done this in a while. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. And please, all the regulars, hit that like button. We get many more viewers than likes. Now, if you don't like it, I don't know why you're watching. Although, if you're new, you should definitely watch. There, I covered all the bases. Good afternoon, Patrick. Hey, Daniel. Good afternoon, Jacob. Hey, CD. We're right back to where we started. Exactly. Does anybody feel like trading a single day now is what used to be like the equivalent of trading a whole week? Like, hey, we went up, we went back, we went this. Now one day is as exhausting as a week used to be. Happy Monday, Jason. Thank you for being here. Can someone suggest some kind of alert service to notify when the Fed speaks? Sometimes they even catch me off guard. Because I've done some stuff. It pops up on news feeds and everything else, depending on who your provider. Some trading people also have it. Hey, options 22. But then you don't know what they're going to... Sometimes the speeches just don't do anything. Today, sometimes the speeches are dovish. Could have not reversed today's move. But boy, you had... Wow. We had Bostic. We had Mary Daly speaking. They were quite hawkish. They were exceptionally hawkish. More rate hikes, a 5 to 5.25 terminal rate. Hold it there. What was it? Even hold it there potentially through 2024. We're just going to have to hold our resolve. Oh, yeah, then on hold through 2024 from Bostic. So, it's going to, if they're literally saying the way it is going to be, and they're expecting even a mild downturn, but then a quick recovery. It's going to take a lot from them to get out of pause mode. It's going to probably take something imploding. But then they get to blame. Or it gets to take some external event that's sort of like then that could be taken as a black swan. We didn't see that coming. No way, nobody could have predicted that happening, so now we'll have to cut. But until that happens, we're saying we're hiking. You're getting probably between 5 and 5.25. And then we're putting on pause. And we're going to sit there and monitor the situation. But we're not expecting inflation to get down. Then they again stressed core PCE. Core's PCE by the end of this year, I think they were talking about 3%. And then back to 2% sometime in 2024. So even if the core PCE drops to 3% this year, that's on their radar screen. But they're not satisfied with that. That's why they'll stay in pause mode. They're not just going to preemptively cut. That's what they keep reiterating. Now we'll see what Powell says tomorrow. But the market, if you look at all the way the yield curves are structured, you got short-term rates relatively high, and then there's a huge drop-off because it's that they're going to have to start cutting. And they keep saying, no, we're just going to pause. We're just going to pause. Hold on one second. Come on! Sorry about that. All right. So, you're working and see a MACD cross down. It means more than means more of Fed is speaking. I don't know. I don't follow the MACD. Good evening, Anissa. I know a lot of people love it. One of the worst testing indicators consistently. People love it for some reason. Could never find decent probabilities with it. So let's see. Let's see. Consumer inflation expectations during the morning rally before the Fed speaky coming in 5%, down from 5.2. Then we had the Fed speaky. Tomorrow, we got the business optimism index forecast to be substantially down from previous. Big thing is Powell speaking overseas. So 8 a.m. Powell speech. Let's see if he's as hawkish and how the markets react to that, or whether they're done with their reaction, or if they take anything he says dovishly if we just retreat, if we go back up. IBD, Investors Business Daily, Economic Optimism Index, forecast to be a slight expansion from prior. Wholesale inventories expected to be up from prior. And then that's about it, besides some API crude oil changes. So that's about it. We have healthcare getting hammered today. Healthcare getting hammered. Mega caps still holding up decently. Tesla up close to 6%. Amazon up close to 150 basis points. So energy pulling back from this morning. Consumer defensive pulling back. Pretty mixed market conditions overall. Pretty mixed software rally. You still had a decent rally in technology overall. Technology up 147 basis points. Consumer cyclical up 91. Healthcare, you see, just getting butchered in consumer defensive. This was a rotation out of the safe stocks. Remember, when we start selling off, you just get a rotation into consumer defensive and healthcare. So even with the pullback, you had a lot of safety stocks getting dumped and rush into technology. So broadly, it was still overall somewhat of a net positive day from a risk asset point of view. Close to 80% for that 25 basis point. Still climbing back up there. You know, when this starts getting over 90, it gets pretty well baked in. Fear and greed index still in neutral. Did I say good evening, Anissa? And thanks for the comment on the podcast. No bounce end of day. That's bearish. So after the close, not much going on. Tomorrow, before the open, Albertsons. Albertsons is pretty key, not to the market, but from my aspect with looking at inflation, with looking at groceries, looking at some core things that people need to live on in inflation and any guidance they give. So that's going to be a pretty decent insight into stuff. But again, not market moving. So let's see what I wanted to cover. I wanted to cover a couple things. By the way, yeah, this is a decently ending the day bearish candle, and we had the double. I'm going to wait to see. By the way, it's going to close within the rotation zone. Remember, this is slightly lower probability. It's coming up to the stop reduction area with that 50 and first target area, and then dropping back down. I want to see if this does formally trigger. By the way, people have asked this before. Well, let's say I can't be around, and I don't know whether to hold it or not. Say you're trying to play it intraday and then, all right, or get in right before if it does close. Although it's interesting once it hits stop reduction and then doesn't close above it. By the way, if you're in doubt, especially in a bear or tactical market, just wait. It'll give another opportunity to get back in. And if you miss a trade, you miss a trade. But it needs to get a close above 111.182. Right now trading 111.7875. Mike, so right at 11:15 Eastern time, we stopped climbing at 39.7325 and went down continuously for the rest of the day. Could you have played this? Logic strategy as a day trade, S&P minis. I'll go over some stuff. That's what I was going to do anyways. I just wanted to go over something else because did I know it would fully retrace? No, but this is why I watch for clear paths. And this is why I wanted to go over a little instructional thing with a clear path. So first off, your first little warning sign it was running out of steam was on your shorter term S&P. Double top pattern. Is that just, hey, against this strong rally, I'm going to try to short this thing? I generally use these as at least if it's triggers, then, okay, long positions exit and wait for that pullback with the 15-minute rotation zone and watch for it to rotate back up. Pulling back down in the 15-minute rotation zone. No break above the key resistance 39.60, then breaking it to the downside. Now, here's something I wanted to show you. This is a really good example with a clear path move. This is why I tell people to monitor clear path moves, because when you start trading into them, there's very little stopping points. So you want to learn something? Here you go. Okay? Clear path move. And what do I tell you to do? We have a 1 hour clear path move. If you want to fine tune it, what do? You go down a time frame. So there's a 1 hour clear path move. I go look at the 15-minute to watch for stopping points. Why am I watching for stopping points within that? Those are areas where the market could react. Okay? You break, little stopping point. See here, if I do this between the candle bodies and the lows, little stopping point. So we get a nice pause there, but you're still in the higher time frame clear path move. Beyond that, beyond this, you see much of a stopping point? I don't. So what are the full then targets? Well, you have the breakout area and the full path move, which is virtually the same on this one. Right here. So that's your full target. That's why if we start getting momentum into a clear path, you can get these kind of trades. Now tomorrow, if we start reversing, there's a little clear path here, a little pause on the 15-minute, and then it goes into a single candle. On the daily, let's say Powell is dovish or something happens overnight. Do we have a clear path going back up? Yes. Where are the areas to watch for? We have the pausing point in here. So that would be a first target area. But even so, could we see acceleration back up into this area with very few stopping points? Yes. Now, you come down here. Why pay attention to these? As you see, what's this to the downside if we start breaking key support? We have another decent clear path. All right, to the upside, remember we had a clear path move, didn't quite get to the very end on the 4 hour. We got to the breakdown zone because there's two areas on the clear path. This is the breakdown zone to it on the 1 hour, and it was trading back into there. And the end of the clear path on the 1 hour was right here versus the 4 hour. The end of the prior clear path on the 1 hour. So here's the breakdown zone. Here was the end of the clear path. Here was the first target. And then why do you look at your multiple time frames? Because what else did we point out? What was also in that vicinity? The 50-day. Why do you think it's on the chart? Because it's something to not be ignored. So you see here with all the ends of that clear path, the breakdown zone, this first target for the double. and the 50 period. That's where it ran smack dab into. And then you got reversal accelerating momentum back down. So at least from, sometimes we don't know this is going to happen. Decent momentum bars right here, by the way. That's a warning sign. So if you're, this is why I love to trail. So let's say you're up here, all these stopping points are in place. Well, let me trail a stop. Uh-oh. Maybe I left it a little wider. Momentum bars to the downside. Let me get a little more aggressive. And then what do we watch? We watch the 15-minute rotation zone. I've talked about this many times. What happened here? Close below 15-minute rotation zone. That's never good in a strong momentum breakout morning. Pausing into lunch, then fine. I'm still hoping it's bullish. Maybe there'll be a bullish continuation trade. What happens here? Into a clear path move. Could not break out. And boom. With some decent momentum, actually. Again. Okay? Breaking down with some decent momentum. So, the only topping pattern that was decent between the NASDAQ and the S&P was this little mini double, which was a little pullback, which targeted into the 15-minute. Once that 15-minute breaks at the end of lunch with momentum again, at least don't be trying to buy it into a clear path. You can see here was a clear path on the, here's the clear path on the S&P. Now, down here, you just have a little mini clear path, and here's a key stopping area. Just wanted to give a little teach. So, if you see here, by the way, this is not a full clear path. And I'll be releasing why in the class. But this gives you enough information to start utilizing that concept. Well, if you're going to try to buy on a 50% and 62%, what happens if you close? That's fine. You're watching for a retracement. Let's go over that. Let me call back in the NASDAQ. What happens? Which is fine. Let's say all right, here, geez, hold on one second. I got to reset my mouse. All right. Come on. There we go. All right. Let's say you were doing a pullback into the 50 to 62. What happens? What is eating up my, hold on, something is eating up my memory. Let's try that. What happens if you're trying to buy something in the 50 to 62.5? What happens when you get the close below 62.5? You get out immediately. Okay? And if you were just doing the breakout swings, which is fine, you just have a little higher buy point, buying against the 50. Little move up. What happens here? You take the loss. You're out. You don't hang it. All right? Don't have a problem buying a pullback, although when you got momentum bars going down, I wait for a pretty strong signal. But let me put those back on. You get a bounce like this, fine. You're playing the bounce. But if this thing stalls out again, All right. I don't give it much leeway. I don't even give it back to, I give it pretty much back to break even and then forget it. Okay. Because why? You got to start getting a failed move with momentum in front of it. Never a good sign. So I don't have a problem if somebody took a shot. Okay. Breakdown, coming back up, but this is a quick stop. This is not something I would ever ride lower. Ever. Yeah, and you're going to, this is why when, my only concern is sometimes when you say, I go in heavy. Well, when do you know a trade's going to work with what when you don't? Unless you go in heavy every time, then it's just a normal trade. That's your normal trade size. But this is the challenge I have with people who say it. I didn't know if you said it this way, or I got aggressive. You said this time I got aggressive. What does aggressive mean? Because, like, literally taking all the doubles in consideration. Now, I can have different risk percentages per time frame, like dailies versus 1 hour. But let's say I'm just trading 5-minute doubles. There's a fixed risk per trade. It's never I get more aggressive on one double than another because I don't know which ones are going to work and which ones aren't. I don't know which pullback into a key 50 to 62.5 are going to work and which ones aren't. So it's a consistent risk per trade. Now, can you get extra slippage? Yes. So can it lead to slightly bigger loss at times? Yes, if you do get slippage. But I don't know. Let's say I'm doing a 2% risk per trade. I don't know in a trading strategy. Let's say I'm at 64% winners using an intraday trading strategy of just harmonics and rotations out of the 50%. I don't know which 64% are going to win and which 36% are going to lose. So I don't know which ones to go on heavy with or aggressive with. You can get signs like going with key momentum signals and everything else, but I still have not found. I had to learn this early on in my trading career to say, okay, I kept varying my risk size way too much, and I was right more than I was wrong, but it was costing me a lot of money. I got to the end of a month and go, I had 67% winners, yet I lost money. How is that possible? And I'm going, I made sure my risk reward was decent. Then I started analyzing the stuff and I started varying my position size so much. And my position size just happened to be I'd be putting them on more when they turned into losers. Or more so. So, look, good reward to risk. Good win percentage, but I was varying my bet size way too much. You know, and I've seen this constantly with people. We're just diving into another little section. Another little thing that I think people should look at with their trading journals and trade logs, because and this is where if you keep things consistent, you can really analyze it. I see people swinging their trade size. I'll do some trades at 1%, some trades at 10%. Well, what if your 10% one was a loser and you did a bunch of 1% that were winners? Well, you end up losing money even with the 90% winners potentially. And I've seen that consistently when I've done coaching with people. I say, bring your trade log as I'm looking. And I'm like, you lost, on this one trade, you lost 50 grand. On a bunch of these trades you won 2 and 3 grand. They're like, yeah, well, I thought that other one would work out. Well, it didn't. And now you're not making any progress with your account because the one you thought would work out, well, it looked the best. Well, looking the best, it's not a beauty contest. I wish trading was a beauty contest. Although if it was a beauty contest, I'd be horrible. So that's a little thing. Now, you're going to get caught off guard. That's why you also manage risk first. Was there any indication besides momentum bars and a reversal of trend that this thing was going to retrace the whole move? Not just in the chart. I mean, the tick drastically changed. Here was the morning tick holding up 1,000, 1,000, 1,000, pulling back to 0. And you see here, here's another warning sign. So again, I don't have a problem taking a shot, people taking a shot at a long. That's fine. You're going into a declining tick into lunch, but look at the afternoon. Compare this section, pulling back. Here's the 0 line. Spike up to 1,000, pull back 0. Spike to 1,000, pull back 0. All right, waning, spike to 900, pull back 0. Spike 800, pull back below 0. Spike 600, pull back minus 500. Uh-oh. All right, well, going in lunch, I'll give it maybe a breakout after lunch. Yep. Wait. Something's coming on negative here. Minus 800. Minus 800. And look at this. Boom, 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 boom. Another why I like to watch market internals. The VIX, which is, I will agree, it's somewhat broken. However, steady decline. Interesting here on the VIX. Just pointing out a couple other things why it's handy. This was a little double bottom reversal. And again, I'm not saying you're going to trade the VIX. I'm saying we're going to analyze this because this could be giving us a warning sign that something's fundamentally changing on the day. And then especially once it breaks above, look at this. That was the all morning. Little drop into the open, bullish into the open, a big ramp up, little double bottom. This really starts giving you a pause once you get that double bottom and then the reversal. And then at the end of the day, just climbing steadily. So, all right, I'm tired. 402, I got to see where the NASDAQ closed. Ooh, it bounced back. Technically did trigger the double, it looks like. Yep. But against the friggin' rotation zone. No close back up. So, we'll still be watching for another retest of that 50 on a bullish move tomorrow. The double is technically triggered. By the way, if you see them come up, hit that first stop reduction, and then retrace most of the move, but still trigger it, it does drop the probabilities. I did a fair amount of testing on that. But the probability is still in the upper 50%. Why is my mouse locking up? I think I just answered that question. I'm getting back to comments now. Do you ever use the intraday VIX? Well, I think I answered that question. See, if I'm going to leg in, I only do, let's say it's a 2% risk, I will do 1% and 1%, and that's it. That makes up my position. I will do up to 2 entries, but it's up to my maximum risk. And I do not, and trading around a core position is not averaging down because you already have it planned out. But I do not, if something starts dropping against me, it's just a losing trade and I'm out. I know where my stop is. So I do 2 entries at most. Most of the times they're just 1. And then it's done. And I know where my stop is. Yeah, Powell's going to talk 8 a.m. Central. Sterling, I rode the RTY, the Russell up until 5-minute double top confirmed, then bailed, 9% profit, but didn't like the price action. Kept watching to see if a bottoming pattern held, but it didn't. Okay, so you notice the 5-minute double top on the Russell. So you rode it up. You saw the 5-minute double top right here. You really like the Russell. Whether you use the aggressive or conservative targets, roughly the same area. So you saw that. Riding the Russell up. Uh-oh. Something's changed. Especially here. What do we get? The pullback to the 15-minute rotation zone and then kaput. And I didn't have a decent bottoming pattern. This was yucky with this spike down in here. I noticed this on the S&P, but it was actually turning into a triple here. But I was going to, if it did get above this peak on the, I'll show you on the S&P because that's the one. This was a little double right here. That was the only key reversal pattern I was watching going into this afternoon's pattern. Why was I watching that one? Well, here's where we took off from this morning, right? Here's the breakout area. You have this. This was a double bottom on the 5-minute. Clear path move. I think I used these. Yeah, I did use these because this pretty much lined up with the end of the move, end of the clear path. So I was watching, and then I made sure I was also on that 15-minute chart to see how that played out, because I was hoping it was going to pause here, get the 15-minute rotation zone out of the way, and then trigger, because that would have been a cleaner move. But that obviously never triggered. That was the only bullish thing that I was watching, but the tick was turning horrible then, and the VIX had already triggered its double bottom, or was triggering its double bottom. But so that's why I wait for something to trigger, and I wanted that. There's no front running that or anything else. And then when it came back down here, what's this? 1, 2, 3, triple, double bottoms off. Then we just tanked. So, don't know if this helps or confuses people. But technically the double did trigger after the first reaction at the 50. How many trading screens do I use to trade? 3. What do I have on each screen? I keep internals up, so I'll keep the tick, although the tick's losing a little relevance, but I keep it up. The VIX. I'll keep up the VIX, keep up the tick, keep up the tick Q, keep up the trend. Then I'm watching other key things. Like besides the markets I'm watching, I have a main screen that I flip between markets because I like the big picture. But then I'll keep up stuff with like what's the chart of the S&P on a shorter term basis because I know my key levels. S&P, NASDAQ, Dow, Russell, crude, notes, dollar index. Those are the big ones because I want to see either breakdown in unisons or rallies in unisons. I keep the dollar index up. Dollar index also breaking key support today, and that did not bounce. Interesting enough. You had the more hawkish signals, and the dollar did not bounce. Very interesting. But look, remember, crude was strong this morning and then rode it all the way back down. So you're starting to see a lot of risk assets riding lower in unison. So those are the kind of things. Portfolio, keep up a portfolio screen. It's more the intraday portfolio. It's not long-term portfolio because I don't need to glance at long-term portfolio throughout the day because you have alert set. You can scan at it, but I don't need it maximized. Then everything else is anything that's being watched to get in or triggers or at currently active trades. Do you have any advice what data to keep track of on Jamovi? What's Jamovi? Hey, Balaji, hold on one second. Bitcoin's caught in a range. Let's see. When the Russell double bottom set up, that I set up that double bottom, I was expecting a rip because if you go back and look at how the price action reacted every other time, it touched the 200 SMA on the 5 minute, it bounced big, but it didn't. That's why you wait for the triggers, though. Yeah, I mean, you had the double here off the 200, and it never triggered. Never even confirmed. You never even got a trade above there. So it was never even a confirmed double. So you expected, which is why hey, I got the setup. Got the setup. And that setup, oh boy, what is going on? Look what the setup was against also. So if you're looking at it, it looked like this at the time. Here's a 200. Here's your 62.5. Here's the setup. No trigger. No, not even a confirmation that it was valid pattern because it never traded above this peak. So this was completely valid, not only against the 200, but against the 62.5. So yeah, it was a completely valid setup. And that's why we keep analyzing, and just because it's there does not mean. That's why I also caution people, especially if you're newer, against trying to front run patterns. What's the trend? It's right here, the NYSE trend. But that's not the good one. What's the good one here? I don't watch it on this platform. What's the intraday one? I forgot on this one. There it is. This one should work. The ARMS trading index. You can look it up. It's roughly helps predict reversals also. It helps with the intraday market trend. It's volume weighted advancers for decliners. You can take a look at that like on Investopedia if you want more information. The trend uses advancers. I forgot exactly how it's been a while since I look at it. It's got volume and advancers and decliners. And it's a ratio. It's helpful, especially to spot trending days versus non-trending days, although gaps can really get you in this because you have to spend some time learning how to analyze it because it can also be misleading. This is based off the whole NYSE. So you can have pretty decent divergences versus the way the futures trade somehow, but it will give you insight into where the volume's going. At some point, I'll do a bigger thing on that. All right. So we're going to wait and see on JPOW tomorrow morning. Again, partway into the clear path and collapsing back down. Now remember, key support is still this 3,900. There's lots of support down here. Was this bullish for a long-term move today? No. Was this means we're going to new lows? No. Means we're coming back down to test some major support area. So, thanks for putting that in there, Sterling. Yep, there you go. Trend is a short-term trading tool that measures volatility in the stock market. Trend represents the relationship between advancing and declining issues by measuring their volume flow. A rising trend depends on a weak market, and a falling trend depicts a strong market. A moving average can be added to smooth the data. Although, and here's where I will give a caveat, you can get a decently strong or weak trend. It's why I use it as a confirming, because tick became weak, but the trend did not get horribly weak today. It actually stayed relatively strong. So it was not confirming. Your best thing to learn to use for judging market internals, you can also use advanced decliners, you can use some other stuff, but my favorite thing to learn to read is the tick and the tick Q. We didn't look at the tick Q yet, which is the NASDAQ tick. The NYSE tick is actually easier to utilize, but you can see it here. You can see a distinct shift. You see this? What was it doing? Strong open. Rally up. The NASDAQ tick stayed relatively sort of caught within the range. The stronger one to show that was the NYSE. But what did this show as the market started breaking down? And what did it show throughout the day? If you're trying to capture it in a trend. You can roughly even see it with the moving averages. See them stair-stepping down? Okay? It's getting weaker. This is the amount of NASDAQ stocks ticking up versus ticking down. So, on the up moves, there are fewer and fewer stocks participating. On the down moves, they're getting more and more. So what's that telling you? There's selling pressure. You can see it here. And then if you look at just a cluster at the end of the day, look at this. If I had to draw a box around here, I don't want text. Boy, why did my mouse just stop? Where's my box thing? Here we go. If I had to draw a box, is the box. Let's just look at some of the bodies or somewhere helps you can spot it. That's why I still like to use candlestick charts on this. Where's the box? Or where's the midpoint in the box? About here? Is the midpoint on this box above or below the zero line? This helps you see it. Look at all the weighting down here. Things are clustering towards the bottom end of the box. That is a weak tick. Indicates far more selling pressure than buying pressure. This, in the earlier part of the day, if we draw a box around here, even taking it into some of this stuff before it really started breaking down, look where the midpoint is. I'm capturing a lot of the moves in here. Look where is this buying pressure or selling pressure? Well, here's the zero line. Even though it's fading a little, it's still got buying pressure. Then you notice the shift. If I take this box, if I can move the box, look at this. Then what happens? See how this is capturing a lot of it, and then it really starts breaking down. I'd have to slim up my box a little. Little box slim fast diet. But look at this. You see how moving that box down, is this as bullish as it was earlier in the day? No. And then it really starts tipping. So that's more so how you analyze the tick from it takes some practice. So that's one of the things on the screen, because you can start to just glance and see noticeable shifts. Uh-oh. Something's shifting. Now, sometimes you get a downshift into lunch, completely normal, and then you get an upshift again in the afternoon. So what was that? That was a bullish morning, consolidation pullback during lunch, resumption of trend afternoon. Versus that same thing can happen lower. See, remember Friday was a lot stronger day, right? Remember Friday? Friday with the big up move. If we look at Friday, Thursday, here's your Friday. And then look how it ended the day strong, okay? See this little consolidation? Let me get maybe to a 15-minute chart. Friday. Breakout, consolidation in lunch, resumption in the afternoon, right? Remember? Boom, boom, boom. So this was the lunchtime pullback consolidation, then resumption of trend. Your tick from Friday. Strong in the morning. Look, pulling back to zero, spiking up, 1200. Look at lunchtime. This is more balanced. If I drew a box around here, it's roughly centered around the zero line. Maybe a little slightly lower, but pull back. Then look at the shift again in the afternoon. Not as strong as the morning, but look. Look at the spike above 1,000, spike above 1,000, spike above 1,000, spikes in the 900s. Pullbacks, yeah, these two went just below zero, but only to minus 200. Little selling pressure here, but overall, if you drew a box around here, is it centered well above zero or not? It's well above zero. You can see it in the moving averages. Morning stronger, flattening out a bit, dipping into lunchtime when we got the consolidation. Then what happens? You can see the moving averages. What did they do? They stayed higher again in the afternoon. Then flattened out right into the close with some profit taken. Going into a Friday. Yeah, if you change it to a line chart, here's your tick with a line chart. I used to use a line chart more often with the tick, but then I really like to see where the highs and lows are going. So I stopped trying to teach that, but that is good advice for the newer people. So here you can see it clearly trending down versus the morning holding up. So if you have to flip to a line chart to help you get the trend, that's a good advice from Sterling. You can clearly see it. Friday, you can see strong open, pull back, lunchtime, going up, staying stronger in the afternoon, not as strong as the open, but strong into the afternoon. Versus today, strong in the morning, then fading, and then never properly recovering. Let me know if that helps or confuses people. All right, real quick, because we're going on an hour. See where we're sitting. And why did this stop working again? Why am I frozen? Hold on. Let me try to free up some. Something's going on in the background here. One more second, just seeing. No, I don't know. All right. All right, let's just review. I'm watching for this 3,900 area to hold overnight. That 3,900 starts breaking down. 3,878 is the next major line in the sand. But this 3,900, if that starts breaking in the European session, not particularly good. So that's what I'm watching overnight. Key resistance is now back to 39.35. The prior breakout zone that we closed well below. Oh boy, something is messed up. NASDAQ technically triggered the double, but did not close above the rotation zone after hitting the first target. I'm keeping an eye now, 1175 as the first pullback area. I'm bumping this down just a hair. I'm bumping this second level down just a little bit to this key area right in here, about 11,120. Those are my two key areas for support. If this 11,120 area starts breaking, it could get really nasty in the NASDAQ. The Dow, but we still have the bullish Dow hit. This is why I was still going to use this. Hit the stop reduction for the breakout trade. I was still going to use this. Coming back down, but holding, closing above key breakout support. So no, not a terribly bullish close, but still holding above key support. If we do break down, I don't want to see 33,480 break in the Dow. Russell, closing actually above Friday's close and above major support. So Russell's actually got the most bullish close out of all of it. But if we do break 1797, the secondary level, you don't want to see break in the Russell's about 1790. The DAX, which got off the hook because it's closing right as the Fed speaky was closing in on 14,900. Next harmonic area. I'm going to be really watching this one to see how it opens. But the key support in that's 14.6. The next major target, should it keep climbing, isn't until about 15,160 because we don't have another harmonic target yet. Notes. This is now in from a weekly standpoint. This qualifies. From a weekly standpoint, it qualifies as a weekly double. Why? Because this is one side of the top on a weekly standpoint. Again, it's far away. I'm really still focusing on a continued rise, possibly back to the 200 area. There's just not a great setup in there. My key support is 113.24 again. Dollar index, again, broke down. Actually closing at the harmonic, but resistance 103, next resistance 103.50. As long as we don't get back above 103.50, still focusing on returning to 101.95 to 102. Crude. We still have the potential double in place. But nothing great short term. US dollar, Japanese yen. Didn't do much today. Still no close below 62.5. The 10-year yields still pegged right at 50. That's the Japanese 10 years. Euro, US dollar, breaking out and closing above key resistance. So short term, there's major resistance up here. And we're getting some divergences with cycles at the top. So there's not a great long setup unless you're already in it at this point from my perspective. The last signal was this rotation percent B buy up, which is now just trailing. Pound, not much going on. Same stuff as I talked about this morning. Bitcoin, still just caught in this huge range. And there's, from my perspective, no micro trading Bitcoin right now. If it does break out above this 17,250 and can sustain that level, we could see 17,804. That's the only thing I'm watching for in the very short term. Tesla, which did still hold up based off the gap to fill the gap. I'm focusing now. Nothing has changed. If we're in a strong market tomorrow, still the same levels as today on a break above 124.47, 127.30, 130.13. And then I'm targeting the daily rotation zone. If we break down towards today's low, I'm targeting the gap fill to 113.02. That's it. Are we close to zero? No. On the yield curve, 10-2s? No. We're nowhere close to zero. We're trading minus 68 basis points. Nowhere close to zero. You can see it here. Zero is all the way up here. Where's zero? All the way up here. We're down here. As I talked about, I think I started off the podcast with this major thing I'm watching. I'm watching this pattern like a hawk. Even if it dips back down, nothing invalidates the double down here. I'm watching this pattern like a hawk. Does mean you have to check on an intraday because this is not going to trigger in one single day unless something blows up in the world. But that's the pattern to keep an eye on. And This is the next one to keep an eye on. This is the 10 3-month. And you can see how deeply inverted that is. And that got, this is huge inversion on the 10 threes. This is insane. But watch for, if this thing starts rapidly steepening, especially gets above about minus 35 basis points again, that should be an alert signal that we could be going into a major steepening cycle. All right. All right. I don't use MAs. They're just up there because they're on all these charts. I just learned to use it to learn to use the eyeball it. If you need help, use that line on close chart. It just practices, and use a 5-minute tick chart even if you don't trade that short a time frame. Use the 5-minute tick chart. Why? Because you start getting up in that, higher than that, like even the 15-minute, you lose way too much nuance. You lose the nuance of the tick in time frames much above 5 minutes. More information in this live stream than classes I'm going into debt for? Well, maybe that should tell you something. How negative I've seen a tick in my experience during a crash. Oh, I don't remember the lowest. I've seen minus 1,800. I think I've seen a minus 2,000 once or twice. Once you start getting below minus 1,200, it's not good. Sustained, if you keep getting negative pushes below minus 1,200, it's not good, but eventually it gets to the point where it becomes a counter signal where it gets to a capitulation signal. If you keep seeing repeated, it's just a bloodbath then. It means you got so many stocks just, you're just getting, I don't even remember what the lowest tick reading is. But if you start seeing stuff minus 1,500, it's a bloody, bloody, bloody day. Let's see. In case you're still here, Balaji, did I say that right? Balaji, yeah. BIIB. I'm tired. Sorry. I thought it was more important to do some teaching occasionally. I don't know if that qualifies. Sterling would have to tell me. It was pretty close. I just want to put that on to see where we traded back at support. BIIB, Biogen. I'd actually be watching if it holds the 200 for a rotation back up. A decent level is still this 285.60 area. By the way, you get a weekly close above today's high. It's a %B weekly buy signal with signal bottoming pattern and in the rotation zone and holding the weekly 200. So there is a buy setup. Sorry, that's setting up currently. Negate that. Let me go back to the daily. Nope, there is no buy setup yet. But if you get a rotation and a weekly close back above about 285.60, it would be a rotation buy. Any stop, though, it has to be, from my perspective, again, can't give specific trading advice, but 263 is very key because you get a close below there. And if you maybe a little wider, 258, although I'd be watching this 200 on a closing basis because you get a close back below that, you could lose this pretty quickly into a weekly single candle clear path and you have a gap below. So, all right. Did I miss anything, anybody? Sometimes I think teaching is a little more important than just sitting here reviewing markets ad nauseum, especially on a day like this. Yeah, I find though using, yes, the tick Q is more relevant for the Qs and the tick for the spiders or the diamonds. However, I like to watch the tick overall for anything because the tick alerts me better than the tick Q to sediment changes. And then I'll verify it on the tick Q. So I was saying if you have to only watch one of them for the most things you're trading, I'd focus on the tick. If you can watch both of them, I'd focus on the tick and reinforce it with the tick Q. Now, if we're having a major divergence day, meaning let's say the S&P is completely flat and the Nasdaq's on a tear, then focus on the tick Q. All right, thank you for sticking around. Sorry I didn't get to it earlier. If you want to go down to the 1 minute, that's fine strategy. I would just not go above the 5 minute. That's the only, I say I won't generally go below 5 minutes. The only time for most stuff, unless we're in major momentum or a report coming out or a Fed thing, the only exception is, I will keep the tick at 5 minutes or lower. NVIDIA held up pretty decently. Is the NVIDIA 15 minutes example of a clear path? There is a clear path going back down. So, and by the way, a clear path is not a trade signal because this thing can stop along the way. It means there's very few pausing areas. For example, I'm now diving down to the 5 minute. You see here, if NVIDIA starts retracing, where do you see support? See how we spotted it first on the 15 minute? Even on the 1 hour, it's closed back into the clear path. You go to the 15 minute, where's there a lot of support in here? There isn't. So, go to the 5 minute, here's the support zone right before the potential gap fill. So that's why, let's say NVIDIA continues rolling over tomorrow. This is where the targets would be back at 153, 152 area, and then for the gap fill, because there's hardly any support in here. That's why it's helpful. Because it can help you fine tune. Look, we're trading into a clear path. Now, where people get in trouble and say, oh, we're going into a clear path, it's a guaranteed short. No. If you have a short trade going into a clear path, it helps you get the targets. But a lot of times you'll close into clear paths. But here's an example of a bottoming, a clear path. Little reversal signal through back up all the way to clear path. And a lot of times you don't get clear paths. And it doesn't guarantee, like here, there's a stopping point for the clear path right here. And it actually did stop the move because you see that candle negates this is the pausing area. So you had a clear path. But I'll give you an example. This is where, all right, you have a clear path down here. Or you just go, oh, we're going back in a clear path, guaranteed to retrace the whole move. No. That's why we use other things along with it. But when you have a clear path, it can help fine tune your targets. And when I see something break down into a clear path, let's say I was long NVIDIA, we break down into a clear path. I want out. Why? Because we could accelerate into that clear path. So let's say my stop levels, especially here, a close below 157.50 area takes us into the clear path. I'm out. I'm out. Does not mean I'm going short. Means I'm out of the long. We get a signal to go short. Okay. Now I can say, look, my breakout area on the clear path is until 153. That's where I can find a target area around there. That target area could be to reduce a stop. Target area could be to take all profits. Target area could be to take partial profits. Like in here, let's say NVIDIA starts tanking back down and there's a short trade. Well, this would definitely be stop reduction. Maybe take something off in case it finds some support and then wait and then target, because this going into a gap is a clear path. And then target a gap fill. How else would I fine tune this with using a clear path? Well, here's our gap harmonics. Look at the target. What's the first thing I watch? Remember, you have to take the gap harmonics up to the most recent high. But look what do I always talk about? The 62.5. We start getting the key closes below that. I really start focusing on the gap fill. Look where we have here. Where's the area I just pointed out? 153, did I not? From just a clear path? Where's the 62.5? 153.06. See how we're combining techniques now? So often you'll combine techniques, it'll point to a similar area. And look where your two lows are, the 75% harmonic from the gap harmonics. You break below that, and look where the breakout zone is. See, here's the breakout zone. Look at that, 87.5 harmonic. And wowsy, 87.5 harmonic coming in at 150.07. So that might be, even before the gap, a key area to lower a stop again. Round number, harmonic, breakout area. See that? How we're combining clear path from a gap, breakout zone, harmonics from gap harmonics, the key levels, and now we can fine tune a trade. There might not be a short setup tomorrow. Let's say the market's super bullish and this bounces, but then let's say CPI on Thursday is a disaster and the market's getting weak and breaks back below this after another rally. Guess what? I got key levels. All right, I got to wrap this up. I'm really getting tired. How can we best measure the real-time relative volume on a 3-minute or 5-minute chart to know if volume is real good on a potential reversal? I just watch how it is relative to the most recent bars. You can also you can put a moving average on the volume, like an 8 or a 10 period moving average on the volume, and start watching for when volume starts kicking in above that. I just generally look at the volume bars. Pavneet. Sterling letting everybody know that Intel closed above the 62.5 on the double bottom, trigger retracement today. Intel, fantastic trading. until there's Sterling's talking about above the 62.5 after hitting the 75% harmonic. So it should target this area. Not guaranteed, but it should. Doesn't have to do it tomorrow. Keep that in mind. Is there a way to target global liquidity? I don't generally chart global liquidity, so I'm not the person to ask. Well, thank you for putting that up there, Sterling. One of my best sessions for sure. Well, thank you, Options 22. Again, if anybody wants to support the channel, you can always do a super chat. You can always do a Patreon, a buy me a coffee. Again, I try to give a lot of information. Some people charge thousands of dollars for this kind of stuff. Maybe I'm an idiot, but I'm just trying to help people become successful. You know? So we'll see. But at least come back and leave comments. With that, I'm going to wrap it up for now. Thank you for the comments. Please leave a comment after the video's over. And I shall talk to everyone later. Well, thank you. That's another way you can join the channel as an advanced supporter. That is another way to help support the channel. There are many ways to do it. You're welcome, Charles. You're welcome, Anissa. Hope everybody learned something tonight. And I shall talk to you all later.